New data out this morning providing some new insights into the state of China's economy. Joining us right now is China Beige Book CEO Leland Miller, which is the organization's September report actually showing that the Chinese economy is starting to build momentum with every key indicator showing improvement. Leland, where is the growth? Where's the improvement? How would you characterize it overall?
Well, it's been an interesting couple of months because the strength is not in one particular place. There's really is broad improvement right now. I think that's going to surprise a lot of people, particularly after this spring where we saw this incredibly volatile, very bad data followed by recovery, followed by very bad data. But what we're seeing is sort of broad-based improvement. It doesn't mean the economy's sizzling. It just means that some of the weakness that has was seen earlier this summer, it's dissipated, and we're really seeing sort of a broad economic improvement right now.
The weakness that we had seen earlier in the year, at the end of last year, at the beginning of this year, it was characterized at the time as something that would make China have less of the upper hand in these negotiations with the United States. Does this improvement change that, give them more leverage?
Well, I don't think it's a coincidence that we're seeing better data right now, just as, the phase 2 deal negotiations are starting to rev up a bit. A lot of the weakness that we saw before was based on weak domestic demand. China has not solved that problem. What they've done is they pull forward growth. There's more goods trade-in programs. There were this spring. You still see some of that now. So a lot of the consumption improvement isn't something that is necessarily durable into the future. We are seeing improvement, but at the same time, this isn't some sort of structural shift. You still see calls in Beijing for a structural shift towards more consumption. They're not doing that. They're pulling growth forward, but the growth they're pulling forward right now at least is working.
So it's manufactured, you think, by the Chinese government?
Well, to some degree. I mean, what you want to see is this weak domestic demand reverse because consumers feel empowered. They want to borrow more. They want to invest more. They like what they see on the horizon. We're not necessarily seeing that. And as a matter of fact, if you look at our credit data, we're seeing some of the lowest levels of credit access we've ever seen in over 15 years of tracking the economy. So it doesn't look like consumers corporates are actually out there borrowing, investing in their future. So the economic data are okay, but some of the things that are to dictate whether this could continue going forward. You're not seeing this optimism from higher investment or from higher borrowing, and I think that's a real concern.
Okay, it's coming, as you mentioned, this second round of negotiations really amps up, and a story that's in the Wall Street Journal today saying that China at this point, and Xi at this point, wants a big concession from President Trump, and that would be to say that the United States actually opposes Taiwan independence. That's a big change from the Biden administration saying that they do not support it. They want an actual, more forceful statement. How will that play in these negotiations?
Well, Beijing always wants the United States to walk away from Taiwan, and sometimes that's rhetorically, and sometimes that's substantively. I don't think there's that many people right now who are cheering on Taiwanese independence. It would open a door that would probably lead to a lot of problematic things. But the Chinese are always looking for signals. What is the U.S. willing to signal to the rest of the world? What are they willing to signal to the Taiwanese that they won't back them, that they're not for them? So a lot of this is about trying to get a sense of whether Trump is willing to put Taiwan on the table writ large. I think that the more important part of these discussions relates to export controls and technology. What the Chinese would really want, sure, they'll take all kinds of declarations on Taiwan. What they really want is export controls pulled back on advanced technology so that they can really gin up their semiconductor industry, so they can gin up their advanced technology machine and really go get them.
And the TikTok deal plays into all of this how? Because we still haven't really heard from Beijing exactly what they think parts of this deal are.
That's exactly right. I think markets are getting ahead of themselves on this. A lot of people think, okay, well, TikTok is solved, check the box, we're going to move on to phase 2. Right now, there isn't much movement on phase 2, despite all these headlines, despite people telling the press that other things are happening, which is just not true. What we might be seeing is the fact that the TikTok deal was doable in 2025, so they're getting it done, and they're pushing anything on a potential phase 2 to early next year. It doesn't mean it can't happen. It just means we know what President Trump wants. He wants more purchases. He wants a lot more buying by China of U.S. commodities and goods. But the question is, what is the United States willing to give up to China in order to get there? That's the bridge that needs to happen in terms terms of a phase 2 deal. We're not there. They're not, they're nowhere near there right now. So I think that they have to actually figure out on the U.S. side, what are they willing to do in order to get this? Otherwise, then they're probably going to walk away from the table.